Welcome to FatCity Finance. If you're looking for 7 high-dividend ETFs to own in 2024, we've got you covered. As we delve into the exciting world of exchange-traded funds, we'll highlight 7 high-dividend ETFs you should consider owning in the coming year. It's no secret that ETFs are a fantastic tool for diversification and income generation, and when you focus on those with high dividends, the payout can be quite rewarding. Before we dive in, please take a moment to hit that like button, subscribe, and ring the bell for all the latest updates. It really helps our channel grow. First off, let's understand what high-dividend ETFs are. In the world of finance, ETF stands for Exchange-Traded Fund. It's a type of investment fund and exchange-traded product traded on stock exchanges just like individual stocks. High-dividend ETFs are a specific category of these funds, known for their focus on stocks that pay out high dividends. So, what's a dividend? In simple terms, it's a portion of a company's earnings paid out to shareholders, usually in cash or additional shares. Companies that consistently pay dividends are often mature and financially stable, making them attractive for investors seeking regular income. Now, why would you want to invest in high-dividend ETFs? Well, there are several reasons. First, they provide a regular stream of income in the form of dividends. This can be particularly appealing if you're nearing retirement or simply looking for consistent returns on your investment. Second, they offer diversification. High-dividend ETFs invest in a variety of companies across different sectors and sometimes even countries. This helps spread the risk and can potentially shield you from drastic losses if one particular stock or sector takes a hit. Lastly, there's the potential for growth. While the main attraction of high-dividend ETFs is the regular income they provide, the underlying stocks have the potential to increase in value over time, leading to capital appreciation. Now that we understand what high-dividend ETFs are, let's move on to our list. Starting off our list, we have 2 promising high-dividend ETFs that are worth considering. First up, let's delve into the world of large-cap US dividend ETFs. This type of ETF is a great way to invest in some of the biggest and most reliable companies in the United States, with the added benefit of receiving regular dividend payments. When evaluating these types of ETFs, there are several factors to consider. The dividend yield is a key indicator of the income you can expect to receive relative to the price of the ETF. Additionally, looking at returns can give you an idea of the growth potential, while the expense ratio tells you how much you'll be paying in fees. To illustrate, let's take a hypothetical large-cap US dividend ETF. This ETF might have a respectable dividend yield of around 3%, solid returns over the past 5 years, and a low expense ratio, making it an attractive option for income-seeking investors. The size of the stocks in the ETF and the total assets under management also point to its stability and reliability. Next on our list is a high-dividend yield ETF that focuses on a specific sector, let's say for instance, a real estate ETF. This type of ETF gives investors exposure to a range of real estate companies and trusts, which often have high dividend yields due to the nature of the real estate industry. When evaluating such an ETF, the same factors come into play: dividend yield, returns, and expense ratio. A typical real estate ETF might offer a higher dividend yield of around 5% due to the income-generating nature of real estate investments. The returns might be more variable given the cyclical nature of the real estate market, but the potential for high income and diversification make it a worthwhile consideration. These are 2 solid options to consider. Let's move on to the next ones. Next up on our list, let's delve into our 3rd and 4th ETFs, respectively. These high-dividend ETFs offer a unique mix of stability and potential growth, making them an enticing addition to any investment portfolio. Our 3rd ETF is known for its focus on large-cap US dividend stocks. This ETF offers a consistent dividend yield, making it an attractive choice for those seeking regular income. What sets it apart is its emphasis on companies with a strong record of paying dividends, which in turn provides a sense of security to investors. Moreover, it's been able to maintain a low expense ratio, which is always a favorable feature for any ETF. Remember, the lower the expense ratio, the more of your money goes towards your actual investment. Moving on to our 4th ETF, this one takes a slightly different approach. Instead of focusing solely on large-cap stocks, it diversifies its assets across large, medium, and small-cap stocks. This approach provides a broader market exposure, potentially enhancing the growth prospects of your investment. However, it's important to note that this diversification also comes with its own set of risks. But don't let that deter you. This ETF has shown impressive returns over the years despite the inherent volatility of the market. It's also worth mentioning that this ETF boasts a high dividend yield. So, if you're an investor looking for both growth and income, this ETF might just be the one for you. These ETFs, with their unique strategies and promising returns, offer a mix of stability and potential growth. They serve as an excellent reminder of how diversifying your portfolio can help you achieve your financial goals. Now let's look at the final three. These ETFs are equally interesting and have their own unique features that make them stand out in the high dividend ETF market. Rounding up our list, we delve into the final three high dividend ETFs that have caught our attention. First up is ETF number 5. This ETF stands out for its impressive dividend yield and solid returns. To paint a clearer picture, let's consider its performance over the past 5 years. The growth trajectory has been steady, with a few minor dips that were swiftly recovered. This ETF's expense ratio is also comparatively lower, making it a cost-effective option for investors. However, like with any investment, it's crucial to understand the risks involved and assess whether it aligns with your investment strategy. Moving on to ETF number 6. This ETF has managed to carve a niche for itself in the large-cap US dividend ETF space. It has a robust assets under management figure indicating its popularity among investors. A glance at its performance chart reveals a consistent upward trend, proving its resilience even in volatile market conditions. With a safe payout and an above-average dividend yield, this ETF has much to offer. Last but certainly not least, we have ETF number 7. This ETF has a unique appeal as it focuses on a specific sector, allowing investors to tap into the growth potential of that industry. The dividend yield is attractive, and the returns have been commendable. The expense ratio, while slightly higher than the others, is justified by the specialized nature of this ETF. These ETFs could be great additions to your portfolio. Remember, always do your own research before investing. Each of these ETFs offers something distinct, and it's essential to choose the ones that best fit your financial goals and risk tolerance. Whether you're looking to diversify your portfolio or seeking a steady income stream, high dividend ETFs can be a worthwhile consideration. As we wrap up our discussion on these 7 high dividend ETFs, it's evident that the world of ETFs is vast and varied. It offers numerous opportunities for investors to grow their wealth while mitigating risks. But, as with all investments, due diligence is key. So there you have it. 7 high dividend ETFs to consider for your portfolio in 2024. As we've journeyed through this exploration, we've delved into the world of high dividend ETFs, showcasing 7 potential options that could be a fitting addition to your investment portfolio. Each ETF presented in this video offers unique benefits from significant dividend yields to the stability of large-cap stocks. It's crucial to remember that these are not mere suggestions, but possible avenues for you to explore further based on your individual financial goals and risk tolerance. Now let's take a quick stroll down memory lane, recapping the key takeaways. We started off by understanding what high dividend ETFs are, their potential benefits, and why they might be a suitable choice for investors seeking regular income. Then, we dove headfirst into the specifics, discussing 7 ETFs that have shown promising returns and high dividends. Remember, investing in high dividend ETFs is not just about the potential for income, it's also about diversification. By spreading your investments across different sectors and companies, you can potentially mitigate risk and enhance the overall health of your portfolio. But it doesn't end there. As any seasoned investor would tell you, the world of finance is dynamic and staying informed is key. So continue to research, analyze, and keep an eye on the factors we discussed today, such as dividend yield, returns, expense ratio, stock size, and assets under management. As we wrap up, I'd like to remind you that careful planning and considering other sources of income is an integral part of your investment journey. Ensure you have a safe payout strategy when buying any dividend investment. Thank you for watching. Don't forget to like this video and subscribe to our channel for more investing insights. And as always, happy investing.